This $2 stock has 5x, if not more, potential. Doesn't mean it's definitely going to go 5x, but I could see it happening over the next 3 to 5 years. All right, let's get into that. First, my name's Austin. I'm a co-owner of cloudmusicsuite.com and of course a stock market investor. We are sitting at like 130 subscribers right now. Thank you so much if you're one of those people. If not, go ahead and hit that subscribe button. And as a thank you, here's a picture of my 2 cats looking out the window. All right, the brown one is Luna and the gray one is Millie. Thank you so much. Hope you enjoyed that picture. Let's get into this video. So this $2 stock is sitting at a price to sales of less than 1, right around a 0.5 price to sales ratio, when big competitors who are like big names in the same industry selling some of the exact same products that they sell at a lower price point are sitting at a 4, 5, or 6 price to sales. And I'm going to use one big competitor as a comparison. This $2 stock that probably could go up 5x, if not more than 5x, is The Honest Company. Okay, so The Honest Company makes diapers, they make wipes, that makes up the majority of the revenue. They also have skin and personal care, they make soaps, shampoos, beauty products. They also even have a supplement line, and they now have the Honest Baby brand that they've integrated into The Honest Company. Great company, I love all of their products. I buy their products personally, okay? I don't have a kid, but I do use their skin and personal care products and soaps and stuff like that. I've loved everything I've used. Great company, great quality, okay? Here are a few important things. They had a CEO transition recently, and the new CEO is Carla Vernon. So Carla Vernon was a vice president at Amazon over household and wellness e-commerce, okay? Honest Company, in terms of their digital side, sells so much more on the digital side than any of their competitors. It's about a half split. So half is in store somewhere like Target or Walmart or Harris Teeter or Kroger, and then half is online. The online sales, remember, are always way more profitable for a company. So that's something to be very bullish about on this company that's specifically in this industry. So it's important to know that their new CEO is very well versed in e-commerce sales and e-commerce marketing and how to run this thing as lean as possible. Still more expansion in SKU expansion in stores, SKU meaning like a unit, a specific unit, but getting the sales to be more on the digital side is going to be huge for margin expansion over time with this company. Before we dive into the numbers, one more person that they just added to the management team is Kate Barton. Kate Barton was the chief brand officer at Magnolia. If you've ever been to Target, I guarantee you've seen Magnolia stuff. So Chip and Joanna Gaines have that company where they make all the household goods. That is Magnolia. She was a chief brand officer building a huge, awesome brand. I have never met anyone who doesn't love Magnolia, especially someone like a Target shopper, okay? Honest Company is huge in Target already, and I'm just excited for Kate Barton being able to grow that over time. Before that, by the way, she was the executive director of marketing at Estee Lauder. Huge skin and personal care, makeup, beauty products, face wipes, stuff like that. I'm sure you've heard of Estee Lauder before, okay? She's a Harvard grad. She's an absolute beast in the business world. So now, at the helm, whether you think this is a good thing, bad thing, I don't care. They have Jessica Alba, they have Carla Vernon, they have Kate Barton. Those three this company's becoming the women's empowerment in this specific industry, and that means something, okay? People with a lot of money also care about social inclusion and social equity. It's just a good story behind the company. For these 3 beastly, business women to be running this company, that's going to be a huge feather in Honest's cap. You're going to hear woman-led company, woman founder, if Jessica Alba, female CEO, female chief growth officer, which is now Kate Barton. She just took this job as the chief growth officer. Super excited for her to do her magic over here at the Honest Company. Anyway, let's jump into the numbers, all right? So let's compare Honest to Procter & Gamble. Honest right now, they are not profitable. That's one thing to be very aware of. They're not free cash flow positive. They are not GAAP or non-GAAP profitable from an EPS standpoint, net income standpoint. So That's one thing to keep in mind. Some people run away from all unprofitable companies, and I don't necessarily blame you, but if you can see the path toward profitability, once the company starts to move into that profitable, first profitable quarter, second profitable quarter, third profitable quarter, then we're starting to talk about some index inclusions, like maybe the S&P 600 small cap, 750 million market cap up to about 3.5 billion market cap. That would be huge for the honest company over time once they turn those profits, and I think that's on the way. Anyway, price to sales ratio, this is trailing 0.54 price to sales right now on Honest. If we go over to Procter & Gamble, sitting at a 4.8 price to sales. So if you just do a little math, that would actually be like a 10x. Okay, just comparing the price to sales of these two companies. And you would think, okay, Procter & Gamble has more growth than the Honest company. That's why it's commanding the higher price to sales ratio. No, Honest actually has considerably more growth than Procter & Gamble. But because there's no profits over at Honest Company, they're getting disrespected, they're getting thrown out into the trash by the market. And, I understand why people don't want to invest in profitable companies, especially if people specifically can't see a path forward. I do personally see a path forward now with Carla, the new CEO. That said, I don't think there's going to be necessarily a 10x potential in Honest right now. Maybe this story will change, but let me explain why. And this story is all about gross profit margin. So the gross margin of Procter & Gamble is somewhere in the 45 to 49% range. Recently it was like 48%, that's amazing. About a year ago it was sitting at 45%, but 45% gross margin, that is huge. Why I don't think that the Honest Company, even though their price to sales is almost a tenth, why I don't think they're going to be a 10x is because their gross margin story is just not nearly as good as Procter & Gamble. I do think margins will expand over time, but we haven't seen it yet, so we can't assume anything. Let's just go off the trailing numbers, 27% margins. That's half. Okay, that's half of what Procter & Gamble has, a little bit better than half. So I don't think it would be reasonable to say, okay, well, they'll definitely be at the same price to sales over the next 3 to 5 years as the market starts to respect Honest Company. Now, I could see Honest at like a 3 price to sales, something like that, 2.5 price to sales. That's why I say about a 5x is probably baked into these shares already, just so they can be in the same conversation as their competitors. Speaking of competitors, when we look at diaper sales and wipe sales, their total percentage increase is increasing more than the market is increasing for diapers. So let's say the amount of diapers sold increased by 2% in a particular quarter. Honest consistently is beating that by about 5x. So if diaper and wipe sales across the US grew by 2%, that means Honest Company is typically, on a quarterly basis, growing by about 10% in the diapers and wipes sales. That means they're stealing market share from people like Pampers, like Huggies, like Millie Moon, all these other diaper and wipe companies that you've seen out there. I do also think their product is a little bit better. I've sent these diapers to a few people. They said they're like more of a lightweight diaper. It's a little bit less puffy and ridiculous, but they're super cute. They're super nice. No diaper rash, anything like that. So that's why I like to hear. So we can have healthy babies that are in cool diapers. You know what I'm saying? So good stuff. But the real story around Honest is not around diapers and wipes. I do like that there's a multifaceted, like multiple arms system. I could see this turning into like a 3-headed monster that is an absolute beast monster over the coming years. This could be diapers and wipes, which there's not a ton of growth there. There's not great margins there, but it's super consistent. Great product. It's really sticky. If people start buying Honest diapers for their kid when they're an infant, they're going to keep buying Honest diapers probably all the way until that kid is out of diapers. So as long as they can keep up the more growth than the specific product category, meaning they grow more than all diaper and wipe sales, then we'll be in a great spot. Keep that revenue, keep that business line killing it. And then skin and personal care, and specifically beauty. Okay, so I see beauty as one arm, I see personal care as another arm, and then I see the diapers and wipes as another arm, with a few other offshoots like Honest baby clothing and stuff like that. But if we want to talk about gross margins, the most disgustingly amazing gross margins is makeup. An up-and-coming makeup brand that has absolutely permeated the market due to social media. They had a great social media marketing campaign, is e.l.f. Beauty. They are only about makeup, beauty products, stuff like that. It's only a beauty company. Their gross margin is almost 70%. If Honest could get just their beauty brand specifically up to a 70% gross margin, holy Jesus, the margins would explode for this company over the coming years. And that means it could command a better valuation, a premium valuation over its competitors, rather than the 10th of a valuation it has right now. Okay, that would be huge if they can get those margin expansions over time, because they're able to push their beauty products and gain ground and gain traction over time with the beauty side of the business. That'd be huge for Honest. That's what I'm looking for. On a quarterly basis, I'm looking at the beauty numbers. Yes, the diapers and wipes are cool, but I'm looking at the beauty numbers mostly. I want them to completely get out of the sanitation business they've been in. I don't think it's a fruitful one. I think just let Clorox handle that and call it a day. I don't think it's good for human health anyway. And it seems like Honest wants to be good for human health. So let's just get out of the sanitation business. As it relates to personal care, like soaps and shampoos and stuff, I think that will be great as well. If you can get someone to use your beauty products, I think it would be easy to have them transition over to using the soaps and the shampoos and stuff like that, moisturizers and all that. So if you get them to use your beauty products, which is a very high margin item, then you can get them to move over to the soaps. If you get them to use the Honest diapers and you notice that there's no rashes with their baby, no diaper rash, anything like that, then they're gonna automatically, inherently trust the soaps that you're making as well. And then who are people having babies? Females, right? Who are the people who mostly buy makeup? Females. So to move from the diapers over to the personal care products, over to the beauty products, very easy transition if Honest is able to hold this one company identity. Someone like Procter & Gamble, they have so many different identities and so many different names for their different things. And of course, they don't make beauty products. But Honest, they could have more household penetration in each category, and each one could be accretive on the next. And it could kind of be like this: if I'm in this category, I can move over to this category easily, and I can move over to this category easily. And I'm going to trust this category of products from Honest. I'm going to trust this from Honest. I'm going to trust this from Honest. And then, like I said, you've got these three legs of the company that are all killing it all at the same time, with the diapers that are kind of the anchor holding everything down in terms of very, very, very stable, not wavering, inflation proof. Everyone needs this. Personal care being a little bit less of that, but still everyone needs soap. Do they need the Honest soap? No, not necessarily. Could they go to a cheaper one? Yes, sure, in an inflationary time. But then the beauty products might be a little bit more cyclical, but huge margin opportunity. That's what I'm looking for over time. Margin expansion, and they must get to free cash flow positive, and they must get to net income positive. And I think they only have a few quarters to figure this out, or else they're gonna have to dilute or go into debt. Once they start to have to dilute and they go into a lot of debt, then the balance sheet's in a worse spot, or diluting shareholder equity is not a good way to keep shareholders happy. So I think it's gotta be massive margin expansion over these next 4 to 6 quarters. I think having someone like Kate Barton and then Carla Vernon at the helm is going to be the way they get there. So let me know if you're buying this $2 stock with 5x potential, maybe even 10x potential, if they can get that margin situation better than Procter & Gamble and like something close to Elf Beauty, around that 70% gross margin. That would be super sick. Let me know if you're interested. Let me know if you think this is a trash stock. Let me know if you think you will never invest in this stock, or if you already own shares. I want to hear about it. Let me know. Thank you for stopping by, and have a great day.